So how do you access money from your policy? There are two options, through loans and withdrawals. So let's take a look at both. Remember, we have two types of account in an IUL. That is the fixed account and the index account. So that leads us to two types of loans. We have indexed loans, also known as participating loans, and fixed loans, also known as washed loans. Let's see how an index loan works. So we have the insurance company's account, your policy's cash value, and your bank account. Assuming you have $100,000 in cash value and you want to borrow $10,000, the insurance company will send $10,000 from their account and charge you, let's say, 5% in this example. So they use your policy as a collateral for the loan. Your full cash value of $100,000 remains untouched, allowing it to earn interest credit as if you never took any loan. This type of loan gives you an opportunity to have an arbitrage or spread. What do I mean? Assuming the index returns 8% at the end of the year, then you will get a 3% gain or spread. However, if the market were to crash or produce a zero return, you will not get any interest credit, but at the same time, you are going to be charged 5% for the loan. This is how index loans work. The interest rate for index loans can be fixed or variable depending on the company. Let's see how the fixed loan works, also known as the wash loan. Same scenario, you have $100,000 in cash value and you want to borrow $10,000 using a fixed loan. This time, there is an extra account, a fixed account which earns at a fixed interest rate, let's say 2% in this example. The insurance company will send you $10,000 from their money and charge you at a fixed rate of, let's say, 2% in this example. This time, they will move $10,000 from your cash value to the fixed account, which also earns at a fixed rate of 2%. Your index account will now have a balance of $90,000. Because you are being charged 2% on the $10,000 loan, and at the same time you are earning 2% on the $10,000 moved into the fixed account, they cancel each other out and hence zero cost, or it washes. The question then becomes, should I do index loans or wash loans? Wash loans make sense if you want to be very conservative because we know exactly what will happen. The opportunity to get an arbitrage is what attracts people to index loans. If the index performs, you can get enough credit to pay the cost of the loan and then some. Obviously, you cannot tell what will happen in the market at the time when you're getting the loan. Another way to access money from your policy is through withdrawal. With withdrawal, the money you request is taken directly from your cash value. So if you have a cash value of $100,000, after withdrawal, the cash value will be $90,000. So pretty straightforward. One thing you have to be aware of is that any money above the cost basis will be subject to income tax. So what is cost basis? Well, cost basis represents the total money or premium you have paid into the policy. For instance, let's say you've paid $20,000 in premium into the policy and the cash value has grown to $25,000. If you withdraw $22,000, $2,000 will be subject to income tax. Because of this pitfall, withdrawal is not often used. The other reason for not using this method is that anytime you put money into a policy, it incurs a premium charge. So if you plan on paying back the money, a loan may be a better option. At retirement, when you don't intend on paying back, withdrawal up to the cost basis and then switching to loans can be a great strategy. I hope this video was helpful. If you have any questions about IUL or life insurance in general, feel free to leave them in the comment section below. I always want my videos to be relevant to your needs. Don't forget to like this video, so YouTube recommends it to more people. Also, subscribe for future videos. If you need any help with setting up a properly designed policy or reviewing a policy you have, feel free to reach out to me. My contact is going to be in the description below. Thank you so much for your time, and I will see you in the next video. Thank you. Bye.